Okay, I think that's the end of the slideshow. So let's move to the Q&A. Please bring up your Q&A questions. And okay, I see quite a few questions already. I'll just take a sip of water. Okay, the first one is on applying for IPOs. So I think recently we went very contra on the first cry IPO, which has kind of delivered as well. So guys, how to apply for IPOs? In fact, I will also cover the rights issue aspect, which I think some of you had an issue with. Just to be aware with what the market is. See, one aspect I would always love to explain to you people is because I feel all of you are do-it-yourself kind of investors whom we have signed up with, and I would want to educate you some these small aspects. So in IPOs, so there are different quotas of applying, right? So there is the typical retail investor quota, which is from an investment, like the minimum investment is to done around 14 to 15,000 and maximum is 2 lakh rupees. Then there is a small HNI quota, which is from 2 lakh to 10 lakh rupees. Then there is a large HNI quota, which is from 10 lakh and beyond. Then you also have these institutional investors. I will not delve into that. I will just stick to the individual investors, which all of you are. What you should do typically is, it is again dependent on what kind of balance, I would say gunpowder, kind of money that you have in your bank account lying idle, which you are ready to invest in market. See, today IPO is a lottery. Okay, any IPOs that we apply for, it's a lottery ticket. If you get the IPO, you are, I would say, bound to get a 10-15%, maybe higher. In again, we usually tell you what expectations are, but typically that kind of gains you would end up making. But if you don't get the lottery, the money is safe in your bank account. So I recommend all of you to take maximum risk here, because the downside is almost zero. Okay, even if the stock corrects post IPO, you always come to us and tell us, Himanshu or the RM, that guys, I have got this IPO, let me know what to do, and we will always help you out. We have, in the last 5 years, we have never faced a case where the IPO allotment has been a loss-making proposition for us. And this is 5 years, we have almost looked at more than 100 plus IPOs, okay, where we have recommended a buy, and I'm talking about none of them have actually given a loss. There are some IPOs which go on loss, and we have typically told you in advance itself to avoid them. Coming specifically on applying, so if you have only say less than 1 lakh, 2 lakh rupees, I would recommend to you apply only for 15,000. That is one lot. That would be around 14 to 15,000 rupees. Apply only for one lot. Try to apply for maximum demat accounts as possible. So like I've always told before also, if you have relatives, you can invest to their accounts as well, but it should be their account, their demat account, their bank account. Okay, so from that you can apply like that. If you have more money, I would recommend to you to apply in the small HNI quota. In the small HNI quota, which is from 2 lakh to 10 lakh rupees, what we have usually observed is the subscription is not very high, and many of the subscribers in this small HNI quota go for the 2.2 lakh rupees lot size. So that is, as I said, 15,000. Say if you put 15 lots, it's 2.25 lakh rupees. So most of them go for the 2.25 lakh lot size. What I would recommend to you, and what has really worked for me as well, is applying for a higher lot size. So maybe you could go for 3.3 lakhs, 4.5 lakhs, whatever number, but anything above 2.2 lakhs up to 10 lakh rupees, you will notice that you will have a higher chance of allotment. I'm not guaranteeing that there will be an allotment, but all I'm saying is, versus the retail investment, the small retail investment of 15,000 rupees, you will see a higher probability of getting an allotment. And the other aspect, like I said, we sometimes go very contra, and the IPOs which are not liked by the market, we give like in the case of First Cry, or even in the case of, I think recently we did, I can't recollect, there are a couple of other names also which were not very highly subscribed IPOs, but we invested and they ended up giving us 30-40%, like Aadhaar Housing Finance and a couple of other names. Sorry, apologies, I'm not recollecting. But yeah, those kind of IPOs, you will actually make a lot of more money than applying for each and every IPO and waiting for the lottery. That is one very important suggestion I would give. Strongly recommend, if you have funds in hand, go for more than 3 lakh, the lot size that comes for more than 3 lakh. I'm not giving a number because that will be confusing. Just think of it, the overall amount you are investing in the IPO should be 3.2, 3.5, 4, 5, 6, 7, 8, 9, less than 10 lakhs. Don't touch 10. Beyond 10, the competition is very high because then you're dealing with the big leagues. Okay, the big HNIs, they have IPO funding, they are borrowing money from the market in crores and they're investing. Okay, so there getting an allotment is not a joke. I would not recommending getting there. So rather focus on the 2 to 10 lakh category if you have funds. If you don't have funds, no problem. We are already giving you stock ideas. Keep investing through that. This IPO is just a quick short-term lottery is all I'm talking about. Okay, so that lottery, if you have funds, I would say take advantage of it. Okay. Yeah, so IPO buy calls have reduced from your side. Like I said, it is primarily caution. There's nothing else. And typically, when the earnings season takes off and we are in the middle of conferences and all, it's difficult to immediately give a stock idea. Rather, those times you will see more of sell ideas coming up. But now, as we start churning the research that we have done, evaluating because please understand the analysis happens over many months, and then we park them. So I analyze the stock and I park it, and I wait for the time where I feel that this stock has bottomed, or now the triggers have started to come where the stock can deliver. That is why you will have seen in many cases, as soon as we give a call, there is one kind of quick rally that comes. That is not because I am buying it. That is because something is happening in that company, which is making not just us, everybody else attractive. Why I am giving it? Because I have now the confidence. The conviction is what is there now to buy those stocks today. So there are many stocks, like you can even say Asian Paints kind of a stock, for example, or a Grasim or an Ultratech cement company. No, those are also very good companies. Those are also have some correction and some things that happen. But I am not seeing the kind of conviction that if I buy, I can see over a 3 to 5 year period, the stock price doubles. So that kind of conviction has to come, and there need to be triggers that are at place, that are ready to play out. Then only I would want to actually invest. Otherwise, I am fine waiting till then, till the triggers are ready, even if there is cash on hand. So let me take my personal example today. At a family level, my portfolio, I would be almost 25 to 30% of my portfolio is actually in cash. Whereas for you, it may not be that high, because for me, it is high because some of the old picks have exited and I'm yet to reinvest. Like I said, and also as a SEBI registered RA, typically the way we invest is the call is first given to you, and 1 week later only I actually invest. Like not even me, even my family members will invest only after a week. Typically, non-SEBI registered may not be following that kind of guidelines, but as SEBI registered advisors, we follow that. So there is always this delay. Even selling happens a week after we have given you the sell call. This kind of maintenance, these kind of things we maintain, and based on that, there's typically, sometimes even we miss out. So there would be like, I think I remember Pearl Global, for example, we had given the call and the stock immediately shot up. I think some of you bought, even some of you also missed out. I also missed out. But later, I think 2 weeks later, it was back at that price for whatever reason, for a short term, and I got it. So this again, another aspect I want to tell you is GTT, good till traded. I have always tried to educate all of you, even my RMs. I have always educated them that keep telling your clients to use GTT orders. So what I do is, as soon as my 1 week is passed, I tell all my relatives, my family, in fact, my own portfolio as well, we keep this good till traded or good till date stock orders, wherein the price where I am comfortable to buy and the quantity, I place those orders and keep it ready. Should the price come there, the order gets executed and it's part of my portfolio as well. Okay. Yeah. Why exited Yatra? I think I've already explained that. On PGIL, so Pearl Global, there are two things at play in Pearl Global. Let me spend a couple of minutes on that. One aspect on Pearl Global is the textile industry tailwinds. The other aspect is specific to Pearl Global. There are some investors who want to exit. So my understanding was, when I gave the call around 740, 750 levels, the investors had largely exited. But there were some new investors that, I mean, some of the existing investors that further decided that now, as soon as it hit 900,000, they decided they also want to sell some of their holdings because they may be holding for 2-3 years or whatever. This is typical part of volatility in the markets. I wouldn't be too worried about it. As I said, I have conviction and understanding of the company's fundamentals, and that recommends. So the initial target was 1,000. It has crossed that number, but I still feel there is some more upside possible. We are, as I said, we have a team of even technicals is also inculcated in the selling process. So the technical analysis here recommends to us that we continue to hold. There could be another 15-20% play on that, and we would like to capture that as well. Like we already done 60-70% upside and another 15-20% to take off. Coming to Paytm. Paytm, guys, some of you still hold, but that is not from our pick. Rather, we had actually recommended an exit, but you continue to hold. All I can suggest to you is that for the time being, it is not a stock worth selling, neither a stock worth buying. Let's just let the tide, completely follow, and let's see whether the water is shallow behind it or there is some kind of concrete base available. Till then, especially the ones of you who are still in losses, I would recommend not to book. If there are some better ideas and you don't have cash, we will then accordingly take a portfolio level decision. But as a particular stock, I am not recommending an exit or a buy at the moment. Okay, is it possible to view index comparison on Zerodha? Zerodha is a brokerage platform. I'm not sure they are offering that kind of comparison. Individual performance, but because you are partnered with us, so we have our ERP, right? So in the ERP, in fact, every annual discussion that we have, we always show to you, okay, what has your performance been. We do not recommend looking at it on a daily basis. So the way you should do is look at over a time period. So 1 year is a decent time period, okay? So when you do our annual renewal with us, we always show you, right? That this is the portfolio performance, the XIR that your portfolio has generated, cash in, cash out, the kind of return the market has given in the same period. Then not just the Nifty 500. Typically, we show you some other indices also. But as I've always said, the benchmark for us is the Nifty 500. This is designated by SEBI as a benchmark. It is not our benchmark. Let me clarify that as well. And we stick to that. Okay. Amazon gives the best rates after adjusting for cashbacks. Maybe, but recent things suggest to us that maybe your Google Indigo is also offering a very good price. Maybe that is adjusted basis, something else is also available. But yeah, that is what market. So it is up to you how you book. But for a general investor who may not be looking as much as at cashbacks, it ends up to be that Google search today is actually impacting the business of online travel agents like GoIBO, Make My Trip, or Ease My Trip Yatra. Right. So Shilpa Medicare seeing promoters selling out their shares, does it indicate any worrying sign? No issues on Shilpa Medicare. So guys, what happens in promoter selling? See, a promoter buying or a promoter selling in the last few, I would say, years with more of influencer marketing and all, many people have started to look at promoter buying as a positive and promoter selling as a negative. In a crude way, it is correct. Usually, if a promoter is putting his money behind the company, incremental money behind the company, it means that the business is doing well. And if he's selling, it may mean that the business is not doing well. However, there are multiple other aspects to it. You need to understand that there are agendas of a promoter as well. We have seen companies with dubious business models where the promoter continues to buy shares on a monthly basis because he is trying to gain such investors who will follow him. And he has seen that kind of returns. A stock that was available at 40 rupees 2 years ago is today trading at 1,200 rupees, a 30x. But in his business, nothing has changed. I am saying nothing. It was doing the same 15% growth and 15% margins then. It is doing the same 15% growth and 15% margin then. There is, in fact, uncertainty on it continuing to do the same growth. The stock has shot up. I am not saying that it is wrong to invest or right to invest. All I am saying is, as an investor, as an advisor, having a fiduciary understanding of you clients, parking, depending on me on the research, I wouldn't want to take our investment bet in such companies where there is issues in the fundamentals of the business. Now, the other side, a promoter selling. Why is that wrong? Sometimes it is wrong. I agree. Sometimes it is wrong because it basically means the promoter himself thinks the stock is overpriced. If you will notice in the case of Kolte Patil, we exited the stock last year around 480 odd levels. The stock went higher and the promoter sold the shares at 480. Now, why did I sell at 480? Two reasons. Number one, the valuation. See, in a real estate company, we try to calculate the asset value of the company. So, what is the net asset value of the company, and what multiple to that asset value is it trading? Typically, I would want to buy a company that is trading below the net asset value, and it is doing some things in the near future wherein the current asset value it could trade at a multiple of it. Example, in Kolte Patil's case, we arrived at a net asset value of 320 rupees and the stock was available at 240 rupees. And I, based on my interaction with the management, so I went to Pune, spoke to brokers and developers in Pune to understand how Kolte Patil, which is a Pune-based developer, doing. They spoke about the expansions in Mumbai and expansions in Hinjewadi and Lavasa side of Pune, which we felt could work out in the near future. So what happened was the net asset value, which was 320 rupees when we bought, eventually went on to become 400 rupees. 400 rupees. And the stock, which was trading at 0.56x, 6x of net asset value, started trading at 1.5x. So 400 to 1.25x of the net asset value. At that level, we started to see that now the upside is limited. The other aspect, we started seeing better opportunities in Ashiana and Suraj Estate. So we decided, let us book here and let us buy those stocks. Now those again, Ashiana and Suraj Estate, we bought at less than 0.5x, both of them. And when we exited, even in the case of Ashiana, I think the call was given at around 200 levels. We exited around 400 plus, I think 450, 400. So this kind of jump is what I want to make. I don't want to be worried about what the management does or not, rather fundamentally what is happening. Yes, what the management or the promoter is doing is a signal for me also. So if you, as I said, as soon as I got to know that Kolte Patil is trading, management is looking at selling some shares. Now, how do I get to know that? As I said, I have worked with institutional investors, and typically when a promoter wants to come with an IPO or wants to sell his shares, they reach out to institutional investors to understand what price an institutional investor would be ready to buy. See, we retail are not going to acquire a large quantity. So usually what's going to happen is institutional investors, they will buy say 1%, 2%, even 5% of the company at a given price. So this price discovery, when that happens, I also happen to participate in that. I'm aware what the management is trying to do. But then again, it is not necessary that the management will definitely sell. It may so happen that management is not comfortable with the price. Like in the case of PCBL, if you some of you investors would remember, I think the old ones, because we exited PCBL in 2023 itself. Management wanted to do, dilute shares at 350 levels, but it didn't work out, and we got out at that time because we felt that this is expensive valuations and may not happen, may happen. The stock corrected to 240, 250, and then today it is at 450 plus. And now the management has announced that we are diluting the shares. So this kind of selling may happen at prices like, see, the promoter is also an investor. You should think of him as two things. He's an investor and a business manager. So being a business manager, he knows about the business, but as an investor, he is also privy to the uncertainties of the market. It is not like he's very sure this is the top and the price will not go up. You may see in Shilpa Medicare, the case, they sold some shares at 350 levels also. We bought at 240. They have sold shares at 350. Now they have sold at shares at 580 also. The stock is trading at 650. Now the reason for Shilpa is actually very, very specific to the company. So they had loans which they had borrowed to give to the company. So this companies, instead of not repaying it, rather what they have done is they are selling those shares that they own, and they are repaying the borrowing that they have done. So the company will continue to hold those shares, and here the promoter has repaid the loans he had. So this is, I say, a very specific case. So like that, there will be more cases, things happen here. It is very, very difficult for me to individually say that, I mean, as an overall, as a bucket, to say that promoter selling is good, promoter selling is bad, or promoter buying is good or buying is bad. I am very, very case specific. We are all, SafeGainz is a bottom up stock picker. We look at stocks from the individual bottom up. What is the promoter doing? What is the management doing? Whether it aligns with the fundamentals of the business. Okay, next is about Reliance. Reliance is a small portion of our model portfolio. I continue to remain invested in them. I do not see a reason to sell, but I do not see a reason to buy as well. I think we the last time we did buying was after the Jio demerger, when Reliance was available at 2100. It was also very, very specific to some investors. I would not want to tell that at 3000 rupees you should buy, or at 2000 again we need to wait. We will keep evaluating. If things look attractive, it may come. Right now, there may be a rally because of the bonus. But please understand, I think I've spoken about this 4 or 5 meetings months ago, that bonus is not creating value. Okay, don't be in the mindset that bonus is creating value. It will go up, it will come down, and it's a trader's game. So we are not looking at that, because then I need to tell you, buy today, next week sell it, next week buy again. That kind of things. You are all also in full-time employment. I respect your time, and I respect my time as well. Okay, next is on pharma sector. I think I spoke about it. We have done the formulations business. We have done some exits. API, that is the intermediaries, are active pharmaceutical ingredients. This is one subsector of pharma industry where we are very, very positive. We already have 3-4 stock ideas in the portfolio, and we'll continue to have more going ahead. Small and microfinance performance is good. Last 4-5 months have not been great. That is why we have also exited. If you remember, some of the stocks we exited I think in the month of June. We quickly exited I think 2-3 names. We are holding, I think, only 5-star business in some portfolios. That is also not in all the portfolios. We will, and some of you were not able to exit, so that is fine. We are continuing to try. Those are good companies. Only thing is, the patch is rough for the next 2-3-4 months. I think that also has, of that, 3 months are already over. So June, July, August are already over. We are now in September. We may look at some financial names going ahead, and that time we will, if you are already holding, as I said, it is a customized portfolio, right? So if you're already holding that particular stock, then we will just recommend to either average it or just keep holding, and you will make the returns commensurate with the market. Don't be worried about that. IPOs to invest in, sir, usually it is on the first or second day is what we typically tell whether to buy or not. Now, some of you have come back and told us, why are you coming so late on the second or third day? Apologies from my end also, because the fact is there are quite a few IPOs coming, and sometimes I'm also in the middle of things and I'm not able to immediately tell you whether you should buy or not. And in some cases, we also look at how the market is responding to it. So, let me give you a tidbit. Typically, the day the IPO opens, right? So one day before that, there's a meeting that happens. It happens either in Mumbai, Delhi, or Bangalore, some city it happens. Sometimes I go and attend that meeting. Sometimes I do it virtually. So that after that meeting, we typically have an interaction among market participants and try to understand what are the good and bad things about the stock. And because of that, sometimes occasionally when we are not very sure, we also delay the idea. So if you are missing out on applying IPOs, as I've always said, no issues at all. If you're applying it, it's a lottery. Just think of it whether do you want to buy every lottery available in the market? I would say not required. You buy 10 out of 15 lotteries available. In that 10, maybe 1 or 2 also strikes for you. You make some 10,000, 5,000 out of it. Be happy with it. This is a short-term gain. We are not looking to make. This is not the money that you want to make from markets. The money you want to make from the market is what we are doing in our secondary portfolio. Reliance I've already covered. If it's right level to enter, while else buy to enter? Please share earlier picks. Guys, yes. So we are aware that if the stock which we have shared earlier, if it is available at attractive valuation right now, it will be recommended to you in your WhatsApp group. This is the reason we do not give everything to everybody. As I said, customizing is very important. And maybe you may be having some other stock and we had given some other stock, but both will move together. And hence, like I've given, always give the example of ICICI Bank and Kotak Mahindra, or say HDFC and Kotak today. So you may already have HDFC, so we may not have given Kotak to you, or you may not be having either, so we have given Kotak to you. This kind of differential is what we are giving you. This is the customizing that we do for you. So be rest assured, your portfolio is taken well care of. Defense and electronics, I think we'll take that last question. We are running out of time, guys. Apologies if you have no questions. I think I've covered all that have come. Yeah. So defense, DCX is our play. We recently did some profit booking. We'll continue to hold it. I think again last week Mahindra announced some order wins. It's a Bangalore-based DCX is a good company, available at very attractive valuations. We'll continue to hold it. Coming to other defense names, especially the PSU names, we do not find as much value. I think a couple of months back I covered it. So as clients, you can listen to the YouTube video. I mean, go to the video channel and just listen to the defense commentary. PSU defense, I'm not comfortable buying right now. I would not recommend to you. Electronics. So I think you would know that we have always selectively played. So we have played Amber, we have played Dixon in the past, we have played Sirma time to time. So there should be times when they are very, very attractive is then when we want to buy. Other times I am not very comfortable with the valuation that we are paying, and hence I wouldn't want. So today most of these electronic manufacturer companies are actually small caps, and I am very worried that they may correct very sharply. In fact, you may have seen in some of the names like Sirma, very, very sharp correction from 600, it went all the way down to 300. Elin Electronics, and there are like 4 or 5 other EMS names also which corrected very sharply. I am very happy that I did not participate in them, and rather I am more happier that the other names that I picked up worked out very well, and the kind of, as I showed the performance, last 1 year 60%. Since August 2019, the model portfolio has delivered 46%. This kind of performance, beating benchmarks outright. I am happy with missing on some names because I am still outperforming the market. I am making very good returns personally. Don't be greedy is what I will tell you. We select 4 or 5 sectors, 25, 30 names in your portfolio, maybe 40 names at the peak, and you will do very well in your performance. And every annual review, that is what we discuss, right? Yeah, okay. I think that's it for the day. Thank you, everybody. Thanks for joining on this Sunday. This 12 to 1 was slightly odd time than our usual 11 to 12. Give us some feedback if you always think that we should tweak something here and there with the presentation. And I think we keep getting some feedback, but it is open to all of you also. Like usually the old clients keep giving us a lot of feedback on how we can improve further. But I would say even the new clients, if you find something that we should do, keep reaching out to us. Reach out to your RMs in the respective WhatsApp groups, and we will take it forward from there. Bye.